The live trading price for Advanced Micro Devices Inc. under the ticker symbol NASDAQ AMD is $250.05 as of our check, showing a dip of approximately 3.70% in intraday movement following the recent market activity. Now, the common expectation after a phenomenal earnings beat, record revenue of $9.2 billion, up 36% year over year, and non-GAAP EPS of $1.20, significantly topping analyst forecasts, is that the stock should soar. That is the expectation, but here's the reality check, the crucial insight you need to grasp. The market is not reacting to the past results. It's pushing back against the valuation that those expectations have already baked in, particularly against the backdrop of an incredibly high forward price-to-earnings multiple hovering around the 150x mark. This drop is a classic case of sell the news driven by immediate profit-taking from investors who saw the massive run-up over 100% year-to-date and decided a small earnings beat wasn't enough to justify the current stock price given the general tech sector anxiety over elevated valuations. The disconnect between a stellar report and a stock price decline is where the real analysis begins, and it forces us to reevaluate the core narrative of Advanced Micro Devices Inc. The prevailing market belief is that AMD is positioned as the primary challenger to NVIDIA stock in the white-hot AI accelerator space, and that the sheer momentum of its new Instinct MI300 series GPUs is unstoppable, guaranteeing continued explosive growth. The reality, however, is more nuanced. While the data center segment revenue was a record-breaking $4.3 billion, and CEO Lisa Su's strong comments about the rapidly scaling data center AI business were encouraging, the sheer scale and dominance of NVIDIA stock means AMD still has a mountain to climb. The recent quarter did not provide a new, tangible, massive AI revenue pipeline figure large enough to immediately justify the stock's current lofty multiple to the satisfaction of aggressive institutional traders, especially in a market that is constantly looking for reasons to book profit on a stock like AMD that is already run so hard. The market needed a shock and awe figure for the future AI business, and what it got, while excellent, was simply better than expected, which often translates to time to take some money off the table when valuations are this stretched. Diving into the recent stock movement, the decline is heavily influenced by the volume of trading immediately following the earnings release. High volumes accompanying the price drop indicate significant institutional repositioning rather than just retail panic. We've seen a pattern of institutional activity where the large funds, many of which use sophisticated algorithms or are affiliated with massive firms like Fidelity or operating their own intelligent portfolio strategies, have been steadily accumulating shares in AMD leading up to the earnings event, anticipating the beat. Now they are offloading a portion of those shares to realize short-term gains. This profit-taking is exacerbated by a broader sectoral movement. The Semiconductor Index has seen some pressure as investors evaluate which companies can truly deliver on the AI promise versus those that merely benefit from the rising tide. The China export ban for the high-performance MI308 GPU, which led to approximately $800 million in inventory charges in a previous quarter and still hangs over the segment, also provides an excuse for the cautious to lighten their position, even if the Q3 guidance excluded those sales, pointing to a potential geopolitical headwind that rivals in the sector may or may not face similarly. The immediate reaction has overshadowed what are genuinely strong underlying segment performances. Client revenue, for example, was a record $2.8 billion, a huge 46% increase year over year, driven by record sales of Ryzen processors. This is a crucial, often overlooked reality check on the company's diversification beyond just the AI hype cycle. The gaming segment also saw a massive 181% year-over-year jump to $1.3 billion, largely thanks to higher semi-custom console revenue and strong demand for Radeon gaming GPUs. These figures demonstrate that AMD is not a single product company. It's a high-performance compute investment that dominates several key markets, making it a much more resilient competitor than some of the smaller, purely AI-focused names. For those who utilize self-investing methods and platforms like Robinhood stock trading for its ease of use, or a more traditional individual brokerage account with interactive brokers, focusing only on the after-hours dip is missing the forest for the trees. The strength in the PC and gaming segments provides a substantial floor for the business, even if the AI ramp isn't as vertical as some of the most aggressive analysts want it to be right now. For a moment, let's briefly zoom out on what Advanced Micro Devices Inc. actually does for those who are new to this online investing space. AMD is one of the world's leading semiconductor design companies, focusing on high-performance computing, graphics, and visualization technologies. Their primary products are central processing units, CPUs, like the Ryzen and EPYC lines, and graphics processing units, GPUs, under the Radeon and Instinct brands. The EPYC server PCUs and Instinct AI accelerators are the real growth engines being discussed today, driving the data center segment. Their business model relies on innovation and efficiency, designing chips and having them manufactured by partners like TSMC, allowing them to remain agile and compete effectively with larger players like Intel CPUs and NVIDIA stock GPUs. This fabless model is a key strategic advantage that allows them to focus their entire R&D budget on architecture and design, rather than massive capital expenditures on fabrication plants. Historically, the company has successfully gained market share from competitors in both the PC, client, and data center server markets by consistently offering performance and price-to-performance ratio leadership, demonstrating a strong history of execution that should not be discounted by one day's price action. Looking ahead, the tension between expectation and reality remains centered on the AI hardware adoption curve. The expectations are astronomically high. The reality, however, is that AMD has solidified major future catalysts that will drive the narrative for the next 2 years. CEO Lisa Su's recent comments on the massive multi-year partnership with OpenAI, which she suggested could generate more than $100 billion in potential revenue, and establishes AMD as a core compute provider for OpenAI, is the ultimate reality check that should temper the profit-taking. The initial large-scale deployment of the MI450 series accelerators is scheduled to start in the second half of 2026. Furthermore, the Oracle Cloud Infrastructure deal to offer the first publicly available AI supercluster powered by the AMD Helios rack design, also using the MI450s, is a significant validation of their full-stack solution and commitment to an open AI ecosystem, contrasting sharply with the proprietary nature of their main competitor. These large-scale, multi-year investments and deployments, combined with the launch of the next-generation MI400 series expected in 2026, are the real long-term growth story. The current stock dip is simply the market adjusting from AI boom now to a massive AI future is being built, but it will take time reality. The opportunity here lies in the fact that the actual revenue and profit from these major deals are still on the horizon, not fully reflected in the current results or guidance, which is why institutions are raising their price targets even after the slight drop. Evercore ISI, Roth MKM, and others have raised their targets, which is the institutional reality pushing back against the retail-focused stock dropped on earnings headline. The future outlook is heavily weighted towards the data center and AI segments. We are looking for continued rapid ramp of the MI300 and MI450 series, and crucially, for the software ecosystem, ROCm, to mature rapidly to narrow the gap with NVIDIA stock's CUDA. Without a robust and easy-to-use software stack, the hardware's power is limited, and this remains a long-term risk. The opportunity for a platform like SoFi Invest or Fidelity Investments to offer structured products around the semiconductor space, or for individuals using Schwab Intelligent Portfolios to have exposure to this sector, hinges on AMD's ability to execute this software strategy. Their self-investing success will be tied to this execution. If they successfully penetrate the hyperscaler market with their full-stack solutions, the revenue growth could easily match the market's aggressive expectations within the next 18 to 24 months. On the risk side, aside from the obvious competition from NVIDIA stock, there is the persistent macro headwind that could affect the PC and gaming segments if consumer spending tightens, though their recent numbers suggest resilience. Additionally, geopolitical risks, like the ongoing regulatory landscape around high-performance chips being shipped to China, remains an unpredictable variable that can instantly hit revenue forecasts, as we've seen. The market is looking for sustained gross margin expansion beyond the reported 54% non-GAAP margin, which is the critical metric to watch, as it will confirm pricing power and product mix shift towards the higher-margin data center products. This leads to the central question for every investment thesis on advanced